New York Fed finds mixed outlook for inflation expectations. Americans' outlook for inflation was mixed last month amid expectations for bigger price rises across a range of key goods and services, while worries about missing debt payments mounted, a report from the Federal Reserve Bank of New York said on Monday. The bank found its March survey of consumer expectation that the public sees inflation a year from now at 3% unchanged from the prior month. The expected level of inflation 3 years from now rose to 2.9% from 2.7% in February, while 5 years from now inflation is seen at 2.6% from the prior month's prediction of 2.9%. Even as the survey found a fragmented inflation outlook, the public in March forecast bigger rises in food, gasoline, rent, college and medical costs a year from now compared to February. Meanwhile, the expected rise of home prices a year from now held steady at 3% for the sixth straight month. The New York Fed report on what consumer foresees for the economy comes as Fed officials, traders and investors are trying to divine whether unexpectedly steady inflation gains at the start of the year mean that last year's swift retreat in inflation has stalled. In February, the Fed's preferred price pressure index, the personal consumption expectation price index, was up by 2.5% compared to a year earlier, a higher rate than January's 2.4% year-over-year gain. Anxiety that inflation may no longer be moving as quickly towards the Fed's 2% inflation target has driven investors to pare back estimate of when the Fed will be able to lower its short-term rate target, with future market now split on the prospect of a June easing. Strong hiring data released on Friday showing the robust payroll expansion in March further complicated the case for the Fed cutting rates. Fed officials have over recent days cautioned that they need to see more progress on inflation before they can sign off on an easing. Fed Governor Michelle Bowman, speaking on Friday, even warned the central bank might need to act further to cool price pressures, saying, "While it is not my baseline outlook, I continue to see the risk that at a future meeting we may need to increase the policy rate further should progress on inflation stall or even reverse." Fed officials believe the expected path of inflation greatly influences the actual level of inflation and have been sanguine on the state of projected price increase, which have on balance come down amid a broader retreat in inflation. On Wednesday, market get a fresh look at price pressure when the government reports on consumer prices for March. The consumer price index is seen rising by 3.4% from the same month a year ago, while stripped of food and energy factors, the index is projected to rise by 3.7%. Inflation data remains a tough factor in determining the time when it becomes appropriate to cut rates, said Tim Dewey, chief U.S. economist with SGH Macro Advisors. To keep the June rate cut in play, the Fed needs to see March and April inflation numbers more like those in the second half of last year, he said, adding that means this week's inflation data could knock out the June cut. The New York Fed report said that views on the labor market were mixed last month, with expectations about earnings growth unchanged, but they responded more pessimistic about job prospects. And while those surveys on balance view their personal financial situation more positively, the largest number in 4 years were worried about missing the debt payment. Those fears were concentrated in lower-income households and among respondents aged 40 to 60. Over recent months, Fed data has shown some signs that more consumers are running into challenges on the debt front, burdened by the higher borrowing rates tied to the Fed policy actions and reduced savings as pandemic support levels have run their course.